All right, good morning, everyone. Welcome back to another live session. Today's the last session of May. It is the 31st of May. It is the last trading day of the month, as well as the debt ceiling possibly being passed through Congress, which is a really big one. So without further ado, I'm going to run through where dollar is. I'm going to run through why I favor trading intraday. I'm also going to cover euro dollar. Euro dollar cracked the low. I was in a intraday long yesterday from around, I'd say 106.90, purely just to catch that impulse, right? I managed to bank just a little bit over a 1-to-1, which isn't great considering what it was floating, but these things happen, right? We can't cry over spilled milk, but what we can do is react and adapt and ask ourselves how we would have reacted differently should this happen to us again. And that is the constant progress of building an edge, and that's something you have to go through as a trader. Now, looking at dollar remains extremely firm. So as much as I want it lower, as much as we all favor a correction lower for us to buy the dips, it is not, just printed a fresh high now going into the London session as risk is on the back foot. So you got the S&P below. Delete this fib. We know that's invalid from yesterday's call. You got the S&P back below 4,200, and you also have the Dow slightly cooling off of the high over there. Nothing major, nothing's really changed. Aussie, fresh lows. Euro, fresh lows sinking, and cable into an area of interest. I favor cable. I like the price action. I feel it has held up. Looking at Euro, looking at Aussie, they have taken out the lows, but cable's really holding firm. And that does stem from a strong pound across the board. If you look at pound yen still, despite this little recovery, or despite this correction to the downside, pound yen is still firm compared to the others, right? Compared to the others. You look at pound Aussie's through the roof, right? So you have a net firm pound. And, not hiding away from this, I was short pound Aussie last week, and it is now trading, over 300 pips against that bias. So this is purely understanding. You need to understand when you're wrong, and you need to understand when you're right. And the beauty of that is there, folks, you don't know which one out of 10 or out of 20, out of 100 trades, you don't know which one is going to be that loser. So you got to treat all trades the same. That is why I love how I look at things, how I trade, because that is purely a non-discretionary approach. I have to treat it the same because I don't know how it's going to react. Now, looking at things today on the economic calendar, I wouldn't really worry too much. You got Eurozone inflation, France and Germany cooling slightly. Excuse me. But the main focus for me would be tomorrow, where we do have that Eurozone, the basket of Eurozone data. Let's take a look at that. At 10 a.m. Right, basket of the Eurozone. We understand that marginally affects Euro across the board. And that is why I'm focusing on pound today, then ideally Euro tomorrow. But looking at cable, briefly touch upon this. The prior trading day, from a technical perspective, breached 1, 2, 3 prior daily highs. There was a lot of that buying pressure. But that also came from a net strong pound, but also dollar selling off yesterday, briefly below 104 at the time. Right, so at the time we had a bit of a correction, and we have to keep things intraday. We have to. As much as we want price in a certain direction, it is not about what we wanted, it's about trading what is actually happening for face value. I had a question from someone, or actually 3 people over the past 2 days, which I said I would address on the calls, and ideally on the induction call, which I'm going to run through some charts and stuff tomorrow night as well, regarding what's my opinion on liquidity grabs and the concepts of stop hunts. I feel it is a retail term, and it has been purely derived from retail principles which have been packaged to sell on a strategy, which I don't think it's a bad thing. I feel everyone learns from someone, and everyone has learned how to trade from someone, but we really can't forget the roots, right? You can't forget the roots of why things move, right? And also managing your risk, right? If price ultimately goes and stops you out, you're wrong. It doesn't matter if it's a stop hunt, it doesn't matter if it's a liquidity grab. I do feel that concept is derived from the lower time frame price action. So I wouldn't really let it worry you too much if you are trading, on the higher time frames, 1 hour, 4 hour, 30 minute, 15 minute. Whereas if highs and lows get broken and it's against you, leave it. I can look at euro right now and I could say, oh, this is a liquidity grab of the lows. Or I can literally just say I'm wrong and I'm okay with that. So I would say, whatever your concept is, whatever you call it, whatever your approach is, just understand that it works till it doesn't, right? It works till it doesn't. Euro has dramatically been on the back foot, for the whole month of May. We can see that now. No high has been broken. As much as we would like a high to be broken, no high has been taken out. Really looking at this, it is phenomenal, right? I would say one of the sharpest declines of the year, right? Euro, from where we entered it at the start of May, it's fallen over 400 pips to the downside. So major selling pressure there from the euro. But, every little rally that we've seen, could it have been a liquidity grab? Could it have been a stop hunt? Only price action will tell you that after the fact, after it's happened. So don't overforce the ideology of it too much, because then every time you see that, you're going to try and go against the trend, and it's not worth it at all, to be fair. If you are going against a trend like I did yesterday, it has to be intraday. Right? You really have to manage your risk. No more than a 20 or 30 pip stop. Because if you're wrong, you're wrong. Nip it in the bud, cut it off, carry on. Right, carry on. But dollar remains super firm. Right, dollar remains super firm. This, purely is for several reasons. Main reason being the fact that all market pricing of Fed cuts have now been, I think the nearest Fed cut is now priced for November, right? So the end of the year. Versus, 2-3 weeks ago, there was the expectation that Fed cuts were going to happen now. And that was very clearly unwound by Fed Chair Powell at the start of May at the Fed meeting. Right, so we want to remember that. Did I expect, for me personally, to have such an overextended rally without a correction? No. Right, no. I did expect us to have a gradual increase, especially euro. Right, euro, biggest mover right now on the board. We understand French inflation really cooling off there is an indication for tomorrow. Right, we understand inflation's cooling across the board. So it does, paint the picture for everything else. In terms of pound Aussie, euro Aussie, is there a trade there? Right? Is there a trade there, or are we forcing trades? Yesterday we covered euro Aussie at the lows, and I did reiterate, there is no reason, despite how good it looks on the 4-hour time frame, there is no reason to sell into prior lows. So the fact that we back up at these highs, this fib is now invalid. We've broken back above the 100% there on the fib. Looking at price action, the only reason I would take this is based off euro strength. I would leave the Aussie alone right now. The Aussie is getting hit, right? Why is the Aussie getting hit? Because you have that firm dollar. Excuse me. So as much as we want a dollar correction lower for us to sell pound Aussie, euro Aussie, there just isn't any trades there. There isn't. It is what it is, right? It is what it is. Can't cry over spilled milk. But also I'd like to remind you that it is a fresh month. And while it's fresh in our minds, go ahead and think for yourself how many opportunities there were in May. Think briefly, 5 seconds in your mind. How many trades were there available in May? Loads. Right, loads. So now you need to think ahead of June. There's going to be loads of trades, loads of opportunities. Don't go ahead and risk everything at the start of the month and then you're in drawdown. And throughout the whole trading month, all you focused on is making that money back. It's not a good mindset to have. It's not a good ideology. And it is something that just feeds onto the gambling addiction side of trading. Because you constantly tell yourself that this one trade will make it all back and life's going to be great after that. Excuse me. And it never is. Right, it never is. So focus for a second on how you can really split up your month And as I mentioned yesterday, if you weren't in yesterday's call, there is a point in your life, like a little bit of a pyramid, where you hit the highest point in your life where you are the most content, the most happy. And quite often, more often than not, we do never reach that level of happiness ever again. There are things that happen in life, right? Traumas and so forth. But there is that thing in our minds that constantly plays in our minds of where we were most happy. It's something that we constantly reflect back on. So if I use that ideology and that principle and I look at the trading month as a whole, throughout the trading month, when you get to the end of the month, there is always that one memory in the back of our minds where we had the highest peak in our profit, but we carried on, we didn't stop. Right? I'm going to think of a term to reference this, to constantly reference this too, but there is a time throughout that cycle, throughout that trading month, where we were at our peak. And that is constantly a reflection point at the end of the month when we're analyzing our month. So we need to subconsciously reprogram our minds while that happens to say, all right, I have hit my peak. I have had this good trade, these good couple trades. I've had enough. I'm going to stop. And that is something each and every one of us should focus on doing. Right? And it's a constant focus. It is not something that you are magically going to obtain. Right? I wish it was. I wish it was that easy. Once you've obtained something, that's it. It's finished, done. But it's a constant fight. It's a constant battle. So, you know, for this year so far, I've really reflected a lot on who I've become, how patient I've become, and more importantly, the type of trader that I need to constantly be. Over the years, my mindset's changed, my mindset's adapt, and I've constantly always looked at the progress that I've had. But then this year, I've been very, very self-aware of what's needed. And using that little pyramid of happiness that is a constant reflection point in our minds is such a good tool in trading, I feel. And let that be cyclically for the month. Let that be cyclically for the quarter. Let that be cyclically for the year. In the year, if I look back, June, July, August are usually great periods for me. Always. I don't know why. Is that a cyclical thing? Is it a psychological thing? Is it because I've had to, stretch my legs for the start of the year and then, once I find my rhythm, trading goes better? Or is that just a period in time where volatility suits my personality? Possibly. But that is a peak that in my mind I constantly refer back to. That does not mean, however, whenever that peak comes round, I need a risk ball. Right, so you want to just keep that in mind. And let that be a reflection point. So tomorrow night, we're going to have the induction call. You're all welcome. We're going to welcome some new people into the group officially. And welcome a new mentor into the group. And also, I want you just to think about what is required of you throughout one trading month. Shout out to Pedro on the call. He's recently passed his phase 1. I look at this and I really see growth. I see potential. But I also, more importantly, I see discipline. So if you're looking at that and, you're struggling to get funded, if you're looking at that and you're the type of individual that, has really struggled on that path of consistency, then you need to really realize it is not the markets. It is not the strategy I'm trading. It's my view of it all. But if you look at it and you say, fine, if I break down my weeks and I break down my months, it's not a lot that's expected of me. And everyone can do it. I'm fully well aware that everyone has the ability to. It is just reshaping your mind. That's the most important. So yeah, $104.60, phenomenal rally. Really, really good. One for the books. Looking at euro, phenomenal sell-off. So as much as we want to buy these dips, and I'll refer to myself there. As much as we want to buy these dips for a quick bag, ultimately, until it breaks 107.50, until it breaks to the upside, and we have that deeper correction, price will continue to sell off. Right, price will continue to sell off. And if anyone remembers, and a lot of you have been watching this for every day now. We have been waiting weeks for this reversal. Weeks. Right? Weeks. And ultimately, as a reference point, if anyone remembers, gold, I think it was February, March. It was February. Throughout January, gold continued to rise, and I like referencing this because it really looks good. Throughout January, December, January, gold continued to rise. In February, gold had that initial reversal and just had that decline for the rest of the month. Looking at euro, same thing, phenomenal rise. Once it had that initial break and decline, gold, euro's been on the sell-off. It's been on the decline. So yeah, really looking at that. If you are trading, let that be if you're trying to trade it now, let it be just an indicator that you have to keep it intraday. I don't care what you're trading, whether you're trading cable, whether you're trading Aussie, it's got to be intraday. Right? Unless you were short from the high, like we all were. I know a lot of you were, but I personally didn't hold it, and I don't think many of you did either. But let that be a reference. Let that be a lesson. Let that be a point that you can look back on to say, look, I had this position. This is what happened afterwards. Am I happy I managed my position from A to B? Yes. Am I happy I managed my risk? Yes. Other than that, shouldn't give a fuck where it goes afterwards, to be fair. That's what a lot of people struggle with. That's what a lot of people struggle with. The yen pairs, dollar yen remains extremely firm in and around the 140 handle. I do expect it to more than likely go ahead, with this dollar strength. Do expect 141. It's not a buy signal, to be fair, given the fact the prior trading day is a bit bearish for me at the moment. We printed fresh daily lows. This could be a bit of an intraday pump before a reversal or a rejection, which, if that is your strategy and you are looking for something to trade, this could be a move. So it could be a sell the rally scenario in dollar yen should we get back up into those highs, which would then facilitate a bit of a 3-drive rally into the high, given the prior trading day, given the reversal. But given this dollar strength, it's not really something I'd be too inclined to take. So I still like cable from where it is. Keep it on your watch list for a possible US session position. Whether you want to draw an ordered block, whether you want to draw whatever you want, it's in and around an area of value for me. So we could see a bounce should we see a bit of a correction on dollar. But don't obviously go and sell that dollar high. Right? There's no reversal, there's no trade. Right? There's no reversal, there's no trade. It is what it is. Let's touch upon oil briefly. Oil, phenomenal sell-off yesterday, down over 5%. At the time of me looking at this, I was quite intrigued by it. I did favor oil selling off from 75. We just didn't get there. But beautiful sell-off. Right? Beautiful sell-off. In terms of what's really happening, there's a lot of fear around an economic slowdown, which is happening. I've seen it in the UK. Everyone's complaining about prices of everything, be that prices of food, be that prices of everything, right? Absolutely everything. You've seen the price of fuel, right? I'm just referring on a day-to-day point of view for consumer spending. You've seen fuel drop, in the UK. It hit the high of I think it was, the most I put in my car was £1.90 a litre, £1.90 a litre. Whereas it's dropped now to 130. So that is purely down to demand. That's purely down to growth. And the fact that inflation in the UK has started to cool, but still remains super high, I do sense there to be more fear and more contraction in growth. Oil relies on growth. And, I mentioned that supply bottleneck in, do I have a bottle there? No. I have this perfume bottle, right? So supply bottleneck so China had this massive reopen. They wanted 5% GDP for the whole year of 2023. They already got 6.5% GDP in the first quarter. So they had this massive rally in GDP they're going to peak. And what's going to happen, you can't sustain that growth for long periods of time. You're going to have that decline. So that is called a bottleneck. You get base effects when things bottom out, and you get bottlenecks when things rise too quick. Go ahead and research that. Let that be your homework for today. And that can clearly be seen in the likes of oil, commodities in general, gold really suffering some losses over the past few weeks. But looking at it, I don't favor buying it. I favor still selling the rallies on gold. So should we, forget this price action that you had on Monday, but should we see, let's put a number, should we see 1975 today at some point? And I still favor selling the rallies on commodities. Commodities are going to feel the pinch. And then, my pick of the day is still cable. I still like it. Should you be interested in it? Monitor it at current market price. What should you be looking for? What would the reversal be? The reversal would be anything along the lines of a bounce from where we are, trading back above. I would put it at 123,700, a bit of an impulse. And then you're buying that reversal. And then you're buying the impulse. It is always tricky business trying to catch a falling knife. So I wouldn't necessarily overly force it. Right? I wouldn't necessarily overly force it. But that's my view anyways. Right? That's my view anyways. Could we get that move today? It'd be good. Could have a bit of an impulsive move, 50, 60 pips. Take your money and you're out. I personally don't expect this dollar strength to withstand the whole trading day because nothing's happening besides the debt ceiling and market pricing on the Fed. There's nothing actually happening. Right? No one's spoken, no one's said anything. So I do expect a move of such. Maybe not as big, but another unwind. But I'm not going to sit there and try and catch the top. I understand that it could happen. And me understanding that it could happen is me then understanding that I could look for a reversal on cable. Aussie, I'd leave Aussie alone. I mean, it's cracked the lows. Euro, same thing. It's cracked the lows. So loads of selling pressure on the euro due to that French inflation missing. Euro sterling, sliding. As much as I want 87.50, it's not there. Right, it's not there. So that also gives us some pound strength, right? Some pound strength. So we could see that bounce. Let's see. Let's monitor it. Right? That's all we can do. Yeah, that's pretty much it really. About Gopal's question, I want to touch up on that. I think it's a valid question. I used to really speak about this a lot. Let me just pull it up on my side. Cool, so I had a question. Let's just say you had a 10K account to trade and I do monthly withdrawals. If I make $500 to $1,000, how much should I reward myself? Do I invest in different asset classes and savings? And then the question led on to, should you be compounding your account? Now, I personally feel compounding an account is you selling yourself onto a dream that you're going to grow $1,000 into 100K and then you only want to make 4 to 5% a month because that's 4 or 5 grand a month. That's good money. I used to believe that. I used to lead myself on. I used to sell myself on that dream that is what I wanted. But little did I know, as time goes on, as I'm seeing my account balance rise, I'm going to risk more. It ends up happening. I end up going through this little lapse and I get a bit carried away. I win 4 or 5 trades and I just end up risking and I lose what I've made. And psychologically, I feel that's more detrimental to your trading psychology because you had a good winning streak, you've made a bunch of profit, but because you've left it in your account and you haven't given yourself that reward, if you lose that, you're going to feel destroyed. Because all this work that you've put in is now gone. Nothing. There's nothing left. Versus paying yourself constantly, little by little. And what that really does for you is you're giving yourself the reward because you're disciplined. But then what you're also doing is you are putting money in different places, i.e. if you do park your money into stocks. I'm not much of a stock believer right now, but I'm looking at some S&P trackers into next year, like to Vanguard ETF and so forth. But I favor parking my money into crypto because if I do have that return, let's just say for every $1,000 I put in, or £1,000, I'm looking at yielding 5,000 minimum, 5x from current prices in crypto. So if I'm really looking to compound my account, for every 1,000 I put in, I got 5k possible return in a year. So all I have to do is constantly pay myself these small chunks, invest it into the right places, because the only way my account, in my opinion, should grow is once I have more money to reinvest into my account. Which then still, I'd be still risking the same percentage, I'd be still risking the same amount, but then I am getting a higher yield. So it's a longer term game. But I understand that if something did happen in my trading account, I have money somewhere else. And don't get me wrong, that has happened to me. I can confidently sit here and speak about it because I've been that person where I've tried to compound my account. I took $1,000 to 27,000 once, right? Just trading dollar yen. And I lost that 27,000 in one trade. I had like 24 lots on dollar yen. I lost it all. No stops because I moved them. But I've done that. I had to do it to grow, to learn, to be who I am. But for me then to realize, had I stopped at 10k and withdrawn 1,000, every 1,000 that I make I would have withdrawn, I would have had that money sitting aside. It wouldn't have hurt me so much. Versus constantly going for it, shooting for the fences, thinking that my trading strategy is invincible, because it's not. As much as we think it is, it's not. So that's personally my opinion. And I do believe in the splitting up your money in three. So saving a third, right? Investing a third, and spending a third. That spending part is the reward. If you want to go for a drink with your friends, it pays for it. If you want to buy new shoes, it pays for it. If you've got some bills to pay, it pays for it. So you have that reward. You know that the work you're putting in is yielding you something tangible. You want to buy a watch, it needs to come from that. You want to buy some silver coins, it has to come from that. So keep that in mind. But it's a long-term game. It should be. It really should be. By the end of the year, if you really just owe yourself a promise, if you want to promise yourself something, is become a more disciplined individual. Because you can go ahead and get funded. You can go ahead and trade 50k of your own money. You know that you have that downside mitigated. You know that you're managing your risk correctly. And then you understand that if shit goes sideways, you know how to deal with it. But by taking the fast road, it's just not sustainable. And I'm speaking from personal experience. But more on this topic on Thursday. I keep saying Thursday. I keep thinking today's Tuesday. But today's Wednesday, so tomorrow, the induction call, 8 p.m. will be recorded as the others have been. And then I'll drop the PDF underneath the recording as usual in case you can't attend. Anyone have any questions? So yeah, today I favor cable. Wait for some sort of reversal from market. If you like it from market, feel free. No more than a 30 pip stop, 20 or 30 pip stop. And yeah, you can go from there.
Marco,
really.
Can you look at the Nasdaq?
What's your bias on Nasdaq, Anthony?
I just looking that it's broken a level of support. Maybe it's done of retest, but it's been
So
I don't know.
Yeah, the issue with the Nasdaq. The issue with the Nasdaq, and I'll be completely honest, is I've been tracking this since 13,000. It is now 1,300 points higher since I've been tracking it. A few other members in the group have been actively trading and tracking this too, and it has been a bitch to trade. We have had several opportunities throughout the months selling the S&P. I know throughout the start of May, a lot of people were getting excited, actually seeing what the S&P can yield, because it can yield you a good return, until it broke higher. The Dow, same thing. It's been good to us. If you have been selling the rallies, looking at the S&P, the Nasdaq, it is tech driven. Nvidia is one of the reasons why the Nasdaq is where it is. Nvidia is now trading at $1 trillion market cap. Nvidia is a company that produce or manufacture microchips, and this is driving the Nasdaq. So unless you're long Nasdaq, I'd leave it alone. I would not want to sell it, even if I got given free money to do so. If anything, I'd sell the Dow. The Dow, has really been weighted to the downside. But even so, I still don't favor selling risk yet. Again, right? It has been on my watch list. I have made good money from risk this year, especially in the FTSE. The FTSE's been my biggest trade of the year. We've been tracking it from the high, which phenomenal. I can't even ask for more. I'm super happy with it, but I know that I've had it. It's enough. And I think the Nasdaq has swallowed up a lot of shorts. I can fully see that. And I put a statement out there. Not a statement, a headline that I saw, which actually shocked me. There you go. Yesterday afternoon, Nvidia short sellers are down 4.1 billion mark-to-market losses since May 24th. So in 1 week, $4 billion is trapped in Nvidia shorts. That's phenomenal. So, no matter who you are, no matter how big you are, no matter how much money you're managing, if you do try and get carried away, you do get humbled very quickly. So, I'm looking at this and I feel like a donut, because I understand we had a shortage in chips. I understand due to the sanctions in Russia. I understand due to the possible invasion of Taiwan. That's what China's trying to do, because Taiwan is the biggest chip manufacturing country in the world. Why wasn't I looking for value where value could be found? So even me, till this day, I'm looking at this. I'm like, I could have 3x my money in a crypto bear market, which then I could have parked into crypto. So there's many things that I'm constantly learning myself, and I'm really looking, where is the upside? Where is the next trade? Where is value where value can be found? But I wouldn't be selling the Nasdaq, in my opinion. If you want to shift that short seller mindset to something, focus on commodities. I feel as the slowdown comes through, commodities are really going to suffer some losses. And if you don't want to trade gold and silver, monitor oil. Look at selling any rallies in oil, because looking at the price action, we can see this has fully turned, versus looking at the Nasdaq trying to sell something that's in a complete bull run. I think it's up like 14% this year, purely tech driven, and Nvidia is one of the drivers for this most recent pump. I personally wouldn't sell it, so I would kindly let you know why too. It's not advice, obviously. It's not financial advice, but it's just something that I'd recommend. So yeah, focus on commodities. What would an oil short look like? Ideally, scenario A would look like selling back into $71 a barrel, back into these two lows. Technically, it looks good. Alternatively, scenario B would be a further drive higher, a little bit higher, $72 a barrel, which lines up with this prior low. So bit of a two-step break. And what I do when I have two areas, I go and I take the higher one to the low of the other, and I delete both zones, because that gives me an area to sell from. So $72 a barrel over the next few sessions. If we do see that, I do feel we will, given the fact we had such a strong decline yesterday. I feel the correction is imminent, and it is due. So let's see. I like cable today. I'll stick with that one.
have a look at Swiss yen.
Swiss yen.
Just looking at it on the 4 hour, it looks as though it's just wicked into a nice area of support.
Yeah, this is a major level on the daily and the weekly. Yeah, solid level. Solid level. I would say this is the type of price action we want to see on cable. We've had that initial push. What I would suggest, yeah, it's already had that little bit of a dip, but yeah, wait for something along the lines of this. If it pulls back into, let's put a number on it, 130, 153, 500. So 14 pips away from where it is. Yeah, it's a good level.
It's already spiked. Yeah.
Yeah, it's a good level. You can at least go with a 35 pip stop or 40 pip stop if you feel a bit happier with that. These lows would ideally be your first little area to target, so you might have to go with the tighter stops for the risk reward makes sense. Or ideally, you want to run it. If you are on the camp that you believe yen will continue to weaken, then that is your trade and go for it. But I like it.
Yeah, I was just looking at it on the 4 hour more than anything else. It just looks beautiful on the 4 hour. Bouncing into that order block at the back, that previous further high.
Yeah.
Around there, yeah.
Yeah.
It's just bounced straight into that level and spiked straight through it.
Yeah, good level, good price. It is purely dependent on dollar yen breaching the high, so yeah, could more than likely do it very easily. Dollar yen's been on this massive bull run. Looking at markets there, folks, a point of reflection for you all would be dollar yen longs and euro dollar shorts throughout the whole month of May. Massive trades, phenomenal moves. These should not entice FOMO. This should purely entice a point of reflection on where things have been, how you could have capitalized on it, and more importantly, a lesson. So the next time you are faced with these conditions, next time you are faced with these market moves, you know how to react. That should be your focus going forward. And then, yeah, crypto briefly on the back foot amidst a risk sell-off. So crypto trading in line with risk there on the day. XRP, supposedly, Brad Garlinghouse, CEO of Ripple, announced a possible green light on the SEC case coming to fruition very soon. So hence the reason we're still trading above 50 cents. Not something, as I mentioned yesterday, not something I'd be buying into the high, but something that I am still bullish on. So it is something that you would ideally stay focused on buying the dips on should price dip. Cardano, look at it, buy it, maybe. Thank me later. But yeah, dollar super firm.
When's this debt ceiling thing? Today?
Should pass today, yes.
Later today. So you think rally and risk?
A relief rally, yes. Because you're suppressing that fear.
Yeah.
And then ideally a relief rally in your majors.
Yeah, I bought a bit of crypto, just mainly because I just don't want to miss out, really. Just in case we don't get any more lows, but I've had to hold back, man. I feel like hold back. I'm thinking, yeah, I'm just gonna fucking go all in. I was like, no, just put a bit in.
Nah, there's no time like the present. To be fair, it'll be fine.
Yeah,
it'll be fine. So yeah, my focus today would be cable. I do expect some sort of reaction possibly into the US session from where it is. Whether you want to draw an order block or fair value gap, or you want to draw a fib, or you have moving averages, trend line, what tickles your fancy, please feel free. I feel I'm non-biased to whatever technicals you want to use, but just please manage your risk. Getting funded, you know, I'm looking at this. I'm going to do a video part series on how I feel about funding, and I'm going to do a funding challenge in the video series. And I'm just going to share my thoughts on it and the psychology around it. But I feel the word challenge, and I was even researching this yesterday, is provoking to the human, because a challenge by definition is something that pushes you. And if you can't pass a challenge, you get triggered, which entices you to want to go again and again and again. So passing a funding challenge and getting funded by definition is purely a test of your trading skills. That's it. If you fail, if you're not ready yet, please don't constantly pursue. Don't reflect and compare yourself to other people in their trading journey. Someone would have or could have already spent hours and weeks and months on self-work, self-reflection to get to where they are, of something that maybe you haven't done yet. And that's fine. You'll get there at your own time. You'll get there at your own pace. But please don't be provoked by the model of it. It is purely a test of your trading skills at the time. Market conditions dependent. You know, some of the biggest hedge funds in the world have a disclaimer at the bottom of their website stating past performance does not predict future results. It's market dependent. It is always market dependent. So leave your heart at the door for a second and say, fine, non-emotional, leave your heart at the door. How can I go through the series of experiences within the market and constantly get the same results? Is by being able to train my mind to react in different conditions. So all you gotta do. It honestly is. But keep cable on your watch list. You know, it could crack lower. I'm not guaranteeing you a position, but I like it. I like it from where it is. Could have a bit of a washout. Let's see. Dollar does remain firm, so we're not going to overforce positions. Could be a US session move, which I don't mind. Yeah, small reminder, tomorrow, 8 p.m. See you there. Anyone got anything to add? Anything they want to ask? Anything they want to run through?
Marco, could you please look at pound Aussie on the weekly time frame?
Yeah. Aussie. Massive level for starters. Very, very big level. You know, I've wanted as lower, or I favored it lower since 185. Looking at the price action, 185, and a nice little lower swing high. I didn't really expect it to really get up at those levels. But yeah, a very strong level. Very similar to GBP NZD, which I covered yesterday. Strong level. Massive level. So how you should approach this, you know, if you're looking at this now and you do favor this short, you really want to, you know, obviously mark it up on the higher time frames. Mark it up on the higher time frames and build a short in and around that price. So should the market get up into 190, 150, trade the reversal around that price and manage it accordingly. If you feel that we're going to have a massive sell-off, by all means. Do not buy it into this price because it is like 80 pips away. That's not the ideology. But should we get up into those prices, then yeah, by all means. It is a very, very big level. I do understand what is driving pound. You really got loads of pressure on the Bank of England to tighten financial conditions, which they're more than likely going to continue to do. There is talks of a possible interest rate reaching the highs of 6% in the UK, which is, hasn't been seen in many, many years, which will strengthen the pound up until then. So could be a driver on pound yen to still hit, wasn't that 175, possibly 175, 177.50, 180 before having the roll. But I like it. Technical perspective, it looks good. We would need a dollar sell-off for this to happen. So what would entice that? That would be a pause from the Fed, right? A pause from the Fed would entice a dollar sell-off. A massive decline in US inflation. A uptick in unemployment. So people losing their jobs, as sad as it sounds. Because that would simply entice Aussie strength. You draw a fib on the Aussie, it does look good. I like it. But it's not something I'm going to try and catch the bottom on. There's loads of things happening, or that would need to happen. So it is time dependent. And I look at these conditions and I say, okay, that scenario, that bias may only play out in 3 months. Am I okay with that? And yeah, the reality is I'm fine. I'm fine with it. And you should be too, whoever's listening. That your bias and your picture that worked for you and your narrative that worked for you at the start of the year might not be working for you now. But that's fine. Right? It might work for you in September again. Might be able to sell the yen pairs into the end of the year like we did last year. Happy days. Pays for Christmas. But please keep risk management at the forefront of your mind. Keep the fact that you're trying to progress. The reason I do these 90-day challenges is not because I want to run, because I fucking hate running. I actually enjoy it now because of what it does for my mind. Right? When I'm running, I ain't thinking about anything else. Anything. Just about controlling my breath. Realizing that I'm here now. I'm not anywhere else. So for a second, my mind shifts to like savage mode of, I need to finish this 5K. I'm focusing on and I listened to this podcast of a runner, and he says, once you truly become in line with your running, you feel every step you take. You feel your lungs taking every breath. You focused on that 5K. And this helps anxiety, this helps everything, because when you are faced with a challenge in life, you realize that it is not everything. You just have to overcome this challenge. Like, your life's not over because of it. Nothing's going to happen because of it. You just have to overcome this challenge. And that was running does for me. And every year, I done this last year. My trading was great. I loved it. I felt awesome. I shouldn't have stopped, but I had an injury. I had shin splints, which was horrible. But I'm doing it this year again because I want to end the year on a excuse me. I want to end the year on a high. And I feel much better already. I haven't been drinking. I've been working out. I feel good. And I encourage you all to take on that challenge too. It is not for exercising, it's for your mind. For sure.
On that note, guys, I've got to shoot off because I'm going to the gym.
Cool, man. I like it. Good stuff.
Yeah, have a good day, guys.
You too, man.
Let's get it.
I'm going to end the recording now and we'll call it a day.